Hey guys, I think we're live. Finally figured out a few tech issues. Obviously, I'm not the tech guy leaning back in the chair. Cam McLellan, welcome to tonight's Q&A. I've got with me special guest, Cass. How are you, Cass?
Great, thank you.
That's it. I've got Al Lewison.
Hey everyone, how are you?
One of our regulars. And Matt Lewison. How are you, Matt?
Thanks, Cam. Good to see you.
Normally I introduce Matt as the propeller head, but I actually gave you a really good one the other day in a podcast we did. It was a... what did I call you? An economic historian. Was that the term I gave you? Really coming up.
I've never heard that one before.
Look at his headphones. He looks like he's been in a time machine. So maybe that's where his insights come from.
Nice.
Out of the 70s.
All right, roll the questions in, people. It was fantastic last month. We were literally bombarded for a good hour and a half, and with just question after question, which is what we love. But I want to talk today a little bit about property management. The reason we've got Cass in is that Cass, give us a snapshot of your background. It's probably the easiest. You've been a property manager now for 4 weeks, 5 weeks, is that right?
Going into my 5th week now.
Fifth week, there you go.
Yep, and enjoying it. So I wish. So yeah, I've been in property management going into 9 years, but started in my real estate career back in coming into the 20th year. Prior to that, I worked in the housing industry with AV Jennings and Henley, the 2 home builders. And then that led me into real estate. So I've done every facet of real estate, from sales to administration, office management, copywriting, marketing manager, so every facet. And then fell into property management 9 years ago and hit the ground running and found my niche in what I love to do and what I'm passionate about.
Beautiful. And
Cass has been around property that much. She's in a position she calls Barry Plant Baz. So she's well known in the property circles.
Yes, so I worked for Barry Plant himself as his marketing manager for a while. Yeah, that's correct.
There you go. So Cass has got a huge amount of experience. She's the operations manager for OpenCorp's property management or national property management team. So, But I wanted to talk today about some of the challenges. I think property management, landlords and tenants have obviously got different views on property management, and trying to navigate your way through the legislation changes that rolled out earlier on in the year, and then what's going on now. We wanted to sort of give people a bit of a snapshot. I know Matt's got some figures. That's a prompt, Matt, to get some figures about what our current portfolios vacancy rates are, and what the impact is to the different segments of people within that portfolio. So we can talk about that. But give us a rundown, Cass. All right, so we're chugging along. Christmas holidays, everyone's off on holidays, feeling good. We've got February comes around, no one's even thinking about COVID, and then boom, lockdown. Talk us through that. So what happened on day one?
So I think day one, look, we were all thrown into a bit of a spin, especially when it was first announced about COVID. Then the restrictions came in. Within 5 to 6 days, the government advised that there would be a moratorium on evictions, but then we had to wait several weeks until we got that communication. So everybody was sort of in limbo. There was a lot of effects. I think our call volume increased by about 600%. Al sort of said that before. So instead of other industries were dying down and, had restrictions on them, so they weren't able to trade, I think the real estate industry, especially property management, everybody was all hands on deck. So there was a lot of inquiries for hardship applications. People weren't sure of their eligibility. I don't think the government were really sure of what their eligibility was until the rules came out. And it made it very difficult for everybody to navigate. But we all pulled together, got through. I think the main thing for landlords and tenants is expectations are quite different. And there is a general consensus out there that landlords have more money, therefore they should provide a reduction for the tenants. But I think everybody should be treated equally and on an individual basis. Not every landlord is in a good financial position and may be facing hardship themselves. So I think from, say, January, February this year, where properties were leasing, there was no concern, market was strong. March, April, May was probably our worst 3 months, with a lot of people having the wrong information that moratorium on evictions just meant basically don't have to pay your rent, don't have to do what you need to do. But that's sort of ironed itself out now. We've had the second wave here in Victoria. Queensland still doing very well, but I'm really happy to report that based on the systems and the team and the infrastructure that we've got in place, OpenCorp are actually kicking goals. We've got the best vacancy rates that we've ever had, the lowest rent arrears. We're leasing properties. We smashed records last month in August with leasing. So for us to be able to do that in a COVID-19 climate, I think it shows that it's a really good, strong market for landlords as well as tenants. And, you know, we will come out of this.
Yeah, that's, can I unpack some of that? I just want to go back to one point just at the start, because I know no one really appreciates the pressure that your team and other property managers around Australia were under in those first period of time. Everyone freaked out. If you're a landlord and an investor, you've got every right to want to know what's going on with your investment property. But your team of, how many have you got nationally?
So we've got a team of about 17 nationally now in the group. Yep.
Yeah. So Cass's team went from basically the call volumes went from, you know, standard call volumes of a business, which you can handle capacity. Every business sort of is at capacity on a day-to-day basis. Do you know what I mean? To copying 1,500 landlords, which rightfully so should be asking questions, all calling at once, and all the tenants calling at once. Not every tenant, but most of them calling at once. Then every one of them emailing as well. Now, that's what you're paid to do, Cass, is to work through that. But I must say, while most businesses were gearing down, yours was definitely gearing up in the workload. So I just wanted to acknowledge what property managers went through during that period while everyone else is, you know, obviously concerned. You guys were just as concerned as everyone else, but you had to handle that sort of workload as well, which I think is just remarkable what you were able to work through.
It's probably worth adding to that ordinarily in a normal course of business, it's still a really tough job because Cass touched on it there as well. There's conflicting interests. You've got your tenants who want one thing, landlords want another one, and you're in the middle of the sandwich trying to keep both people happy. And I guess you're working for the landlord ultimately, but they need the rent from the tenant and you've got to try and juggle that, navigate as best you can. You throw COVID in the mix and it just became horrible is probably the best way to put it all of a sudden.
Yeah, I want to unpack COVID a little bit more. I'll flip across to Louis, but I do want, just for viewers so you know what the show's about, I want to get through the sort of the COVID impacts and those sort of things. I'm not going to lightly brush over them, but I do want to get into some basic learnings that viewers can, you know, take away and understand how property managers work and to get the best out of their property managers. So I'm going to put you on the test a little bit later on, Cass, as far as how different situations occur. Louis, sorry, mate, you want to say something?
No, that's all right. I just wanted to ask Cass, like, having gone through probably a once in a generation, I guess, experience, what are some of the things that surprised you about the last 6 to 9 months dealing with COVID and specifically in the property management space? Like, is there anything that kind of shocked you in a positive or a negative way that you've learned from?
Look, I actually think it would have more of an impact on our rental returns and our leasing strategy, but I think we were in the best place. A lot of real estate agents out there in traditional property management land, hands were tied because of no inspections, the restrictions that were put on with stage 4. So I would have thought it would have had more of an impact. But for the results that we're getting and the fact that we've got our lowest rent arrears, I am surprised by that, because if anything in a hardship situation, I would have thought we'd have more of an impact there. Because we've got our virtual tours, our floor plans, we had all of that set up from the get-go with our properties from the beginning. That's enabled us to also securely lease properties. So it hasn't been as negative as we'd like. I think the main impact is for the landlords with tenants who have requested hardship, waiting for the grants to come through from the government and trying to ascertain those that are eligible and have genuine financial hardship and those that might not be in that situation.
And my understanding is when somebody's applying for hardship, and I think to put it in perspective, we've had, I think it's just over 10% of the portfolio have applied for hardship of some type. And there's
Correct.
A very iterative process that your team has to go through with those tenants and the landlord to try and strike a deal, whether it's to defer some of that payment or to waive the rent. Can you just perhaps explain that process for everyone?
Yeah, sure. So initially what we're asking for is evidence to prove hardship. The government came out with a 30% rule that if the rent was more than 30% of the household income, that the tenant should be eligible for hardship, or whether their income had been impacted by more than 25%. We were inundated with applications for hardship initially, but when we asked them for that information, that died down very quickly to probably 25% of the applications. And those then that were able to prove that information and provide evidence, we work with them and the landlords to find a favourable outcome for everybody. I'm happy to report I met with Cam this morning and we went through those that are lasting at the moment, and we're probably down to around about 3 or 4% of the portfolio that are still on hardship plans, and we're working through that with our clients. So it was a difficult position to go in, and I think there was a lot of media presence and a lot of misinformation communicated out there to both states what tenants could be eligible for, and once we're able to ascertain that, we're able to sort of pull it more into line.
So Louis, I'll just jump in. So just wanted to piece on, let you guys know what Cass and I did this morning is went through with each of their clients who have got some sort of payment arrangement, and Cass is calling through each of those. So this is on your budget, Al. I said to Cass, if they do need financial assistance, any of them, if there's a difference made up and they're under financial strain themselves, then we'll cover that. So, or assist with some sort of arrangement there. Sorry, Lou.
And it's, sorry, Matt, one more quick one. And it's a really good point. And even at the start, like I think Cass, the first week that the COVID thing was announced and before the government came out and defined clearly what the rules were, some landlords are ringing saying, let me do whatever I can. If I have to charge no rent, I'll do it. And others saying there's no chance I'll drop my rent at all. And as you said, everyone's in a different financial position. Some really need the rent, some don't. And it's not fair to cast a net on everybody just saying,
correct,
one thing fits all.
Absolutely. And everybody knows I love the numbers. So just, I guess, to put it all in perspective. So with around 10% of the portfolio going into, I guess, some form of hardship arrangement, I think it was on average across that 10%, 18% rent reduction or rent deferral. So when you actually sum those up across the whole portfolio, it's 1.8% rent reduction, which I think is one of the great things about residential property, and particularly the type of portfolio that we like of single family homes where there's long-term demand below that median house price, where obviously the majority of people were still able to pay their rent, even if they were receiving less income. But I thought one of the other really key things that a lot of people missed was that even if you were one of those people whose rents dropped 18%, a lot of people have actually seen their mortgage payments. And I don't know whether you've had these conversations with specific people or whether it's just a technical thing that I've identified, but mortgage payments have dropped by more than 20% if people have been on variable interest rates. So if their rents dropped 18%, your mortgage repayments have dropped 25%, then they potentially still even better off. But I know that that's not always the case because some people have fixed interest and they've got different situations. But have you had much feedback from any of our landlords about that, sort of commenting that they thought they'd be worse off than they are?
No, look, I think most landlords, look, I don't know the individual situation being variable versus fixed, but I know that a lot have had to put a freeze on their mortgage, and that is going to impact them when it comes out of it. And I think that's what everybody needs to understand. Freezing your mortgage doesn't mean the repayment goes away, it just means that it's delayed. And on average, it adds to their final figure that they've got to pay back. But the response has been amazing. And like Alistair said, there's some landlords that are able to afford to provide a reduction, and that's been wonderful. And then there's others that aren't in that financial position to be able to do so. So we've just had to try and negotiate. But it has been a very difficult couple of months just trying to work on each basis and treating each basis on its own merits, because every situation is unique. Not everybody can be cast on the same net.
One figure you raised before, Cass, I think is worth highlighting. You mentioned that the government have stated that if household income, if the rent's higher than 30% of the household income, then that's an immediate drop in the rental amount. There's no if, buts, or maybes. This is a reason, and I think our average client is sitting at 26%, so that didn't impact those clients unless the tenant then had a reduction in wage due to loss of job. This is very different to the affluent or the blue chip end of the market, which if they've got people on who are sometimes on 50% rent to household income, straight away they get that reduction in rent. So the people who try to hold those blue chip properties may have been financially impacted themselves, plus they're losing huge amount of the rent that they're used to get coming in. So once again, I think the type of product that clients are holding, that we hold ourselves, is a lot smarter during these economic times.
Yeah, it really helped to advocate for the type of properties that we suggest for our clients. In regards, as you said, imagine if you rent that you're expecting $2,000 a week and the household all of a sudden on JobKeeper, well, you're not getting any rent.
Yeah.
Or you're in a commercial property and I know you rent into a cafe or a business that can't operate, or hospitality, no rent comes in. Just so much risk there that I guess is overcome with, we didn't picture it up front and when we set the strategy up, but when you look back at it and we talk about buying below the median and the reasons for it, the depth of the market who can rent your properties, it all just starts to show dividends at this point in time.
Cass, I want to ask, so this is outside of the COVID realm, and we may come back to asking COVID pandemic type property management questions. But one thing that I think is really important for people to understand is the way a property manager should act and what they should and shouldn't be doing. Al and I, when we built our original portfolio decades ago, and Louis was building portfolios at this stage as well, we thought a great property manager was one that never spoke to you. So we had a property manager, Luke, very clean. So we looked after it.
Let's watch the name names.
Won't name names.
I wasn't going to say his name. I knew it would come to it, but I wasn't going to say his name.
It's like the bank that screwed me over my first loan. I'd never name their names, Bank of Melbourne. But the property manager that looked after our initial portfolio.
How good was he?
Oh, well, kid was amazing. We'd never hear a thing from him.
No maintenance ever needed.
No maintenance ever needed until it came time for a tenant changeover. We went and had a look at the property and I was, oh my God. So I think people need to understand that they need to be in sync with their property managers and need to be sort of working with them. I think one thing's really important that Michael, Director of Investment Consulting, explains really well to clients and budgets out for them over the period of time, that there is maintenance required along the period of time. If you get a new car worth 50 grand, well, you're going to pay thousands of dollars in that first year on servicing. People get a $500,000 house and go, why am I paying $500 to service aircon and fix up the termites and termite protection and service a garage door? So it always amazes me that people can't relate servicing of a house, the maintenance. And the reason there's maintenance on a rental property, this is probably an important one, as opposed to an owner-occupied home. So there's more maintenance required on a rental property because it gets used harder. That's just the reality of it. And if I'm here and something needs fixing, I'll grab a screwdriver and fix it. Half the tenants go, I'll just call the landlord. It's up to them. It's not up to me to pick a screwdriver up. Some can't, do you know what I mean? So, but when it comes to expectations that landlords should have, Cass, what should they? What sort of questions should they be asking? When the property manager calls up the landlord and says, hot water service is not working, I need to send a plumber out. What type of things should you be asking to test whether the property manager's done their job correctly?
Yeah, look, I think it's important. I'll just sort of catch on what you said before. The property managers, this is what I'm very passionate about. Yeah. I think if no news is good news in some scenarios, but not when it comes to property management. I think once you've built a relationship with your landlord and you've instilled that trust in the relationship where they know that you're managing their property, then things can go more silent. But definitely in the beginning, it's very important that landlords are kept up to date with all the milestones. And when I talk about milestones, it might be change in occupancy, tenant vacating, new leases, rent increases, rent reviews, all those scenarios. Traditionally property managers that you don't hear from in the fourth, and then there's a changeover in tenancy, and then all of a sudden you get all this maintenance, and it's because things haven't been recognised. When a landlord contacts their property manager, I think it's really important that the property manager is, doing their due diligence, doing troubleshooting, letting the landlord know that they've tried to problem solve with the tenant, get as much history and information, double checking if the appliance is under warranty before they organise a tradesperson to go out, look at the servicing requirements. As you said, Cam, it is very important having an investment property. It will cost you money. The more proactive you are, the less reactive you need to be throughout the tenancy, and that goes to do with the property manager as well as the maintenance. Back in the day where you used to sort of just fix things when they broke, I think a lot of warranties now have changed. A lot of the manufacturers have changed what they're doing with their warranties as well, and they're voiding warranty unless things are regularly serviced. So looking at air conditioners, carbon monoxide testing in Victoria, heater servicing, garage doors, pest control. Very, very important that all those things are looked at. And that's all sort of incorporated into the budget of owning an investment property.
Yeah, that's it. Hey, I've got a couple of questions here and welcome a couple of people. Susie, Ethan, Nathan, Nate, thanks for jumping on board. Quick one. Susie, am I saying that right? Apologies. This might be one for you, Matt. So Matt runs our acquisition team. So Matt, basically his team, have got a team of analysts that go around Australia and have a look at each capital city. They've got a criteria they go by, then look at the growth corridors. The question is, Matt, which activity centre, and we're talking Melbourne here, they've named a few, Footscray, Sunshine, Broadmeadows, Ringwood, Box Hill, Dandenong, Narre, Warren, Frankston, do you believe represents the best value for money and future capital growth in Melbourne presently? So I've got two screens going, guys, so if I'm looking over there, that's why I'm looking there.
That's right. You went through them all very quickly.
Well, probably a better way. Which growth corridor do you like and why? Because I rather think they're a bit bigger than activity centres, but it is a good point, the activity centres, so we can come back to that.
Yeah, so look, obviously there's a lot to take into account. So also, where's your current property now? Where do you own property? If you don't want to be overweight in one area and have all your eggs in one basket. Now, in terms of proximity to the CBD and scarcity of land, we like the northern suburbs of Melbourne, where there's good access into the city, there's good infrastructure going through there. And there is still, well on the outer fringe, there is a lot of land to come through. There's pockets in that sort of middle, sort of 20-kilometre radius from the CBD where there's still some okay buying or good buying, but limited land opportunities and good infrastructure. We also like the southeastern corridor, and that's because there's a huge, demographic within Melbourne of business owners living out in that pocket of Melbourne, families who have been there for decades and generations. So it's always going to be in demand. And I guess one of the key things is most Australians will move within 7 kilometres, or they'll buy within 7 kilometres of where they are living, and they want to rent within 7 kilometres of where they are living where possible. So obviously where there's a huge population, such as in the southeastern suburbs of Melbourne, they want to stay in that pocket as much as possible. So even though you're a bit further out of the city than you would be, say, if you were going west, there's amazing infrastructure in the southeast. There's a huge population there, and that's always going to attract more and more people. And the amount of jobs being generated in that southeastern and eastern suburbs of Melbourne through the different LGAs, through Dandenong, even out to Cassie now, and even Frankston, which is easy commute from somewhere like a Cranbourne, for instance, that there's always going to be demand in that pocket, and there's less land available now within the urban growth boundary, and it's getting less and less by the year. So obviously we love those pockets. We continue to go out to the western suburbs, and before I got locked in my house for the last 8 months, we were doing tours around Werribee, having a look at the growth areas around there, as well as the infrastructure. Look, I like some of the stuff that's going on out there, but there's just so much land and so many big tracts and big pockets of land that's all getting churned out at the same time with little variation of products. So that's obviously one of the things that makes us a bit nervous. Price point, surprises. Sorry, I'm going on for a bit longer than.
No, go for it, mate. This is good stuff.
So incredibly, the price point in Werribee is pretty much on par with Greenvale, which we would consider Greenvale in the northern suburbs a really premium suburb. But the rents in Werribee are considerably less, and the end value for houses and the potential growth is not quite there either. So anyway, I could chew everyone's ear off for the rest of the night talking about.
How much land is unlocked beyond Werribee versus beyond Greenvale or Craigieburn?
So if you go just due north of Greenvale, you've still got Mickleham to be developed, but there's only a couple of thousand lots in Mickleham, and that's 10 k's past Greenvale. And then there's very limited land in between there. If you go out to Werribee, you've got the land out towards Manor Lakes, and then you're pretty much going all the way out to Melton with large, massive parcels of land. And that was the thing. It took us a whole day of driving around, and we still didn't see all of the estates that are available right now. out in that western corridor.
No, very cool. Leonie's got a question on insurance, which I think is a ripper. Hey, Leonie, Frankston South girl, 5 minutes to the beach. Good to see. The question is on insurance companies, Cass. I probably premised this with we're not able to give insurance advice at all. So there's not advice and you're not giving advice, but do you know when insurance companies will lift restrictions in buying landlord insurance policies for a new property? So maybe just give a quick snapshot on what's happened with insurance and then what you've heard might be happening.
Yep. So with COVID-19, they brought in an embargo on landlords' insurance policies, so no new insurance policies were offered. We were advised that it would more than likely end when the moratorium ends, which was the 30th of September. Unfortunately, the moratorium was extended to the 31st of December and then extended again to March next year. So we haven't heard when the embargo is going to be lifted, but I would say while the restrictions are still on and COVID's in play, that the embargo will stand. There are still landlords insurance policies available through industry-specific funds such as Terry Shear Property Insurance Plus, EBM, CoverWise. They're just some of the policies that are available. They just won't cover rent default. So it's very important to look at when you're comparing apples with policies. You can still get cover for malicious and accidental damage, pets, periodic leases, which is very important. There are some policies out there that
The Cass frozen? Frozen.
they won't cover you. Still policies available for.
Just recap on that. You froze for about 30 seconds there. So just go back to the what policies may be available from who, but you're not telling.
I think you said industry-specific policies, and then it froze.
Industry-specific policies. So they will still have landlords insurance policies, but just don't cover the rent default aspect. So you're still covered for accidental damage, malicious damage, pets, rubbish removal, things like that, and when leases lapse to periodic. But at this stage, we haven't received any advice when they're going to lift the embargo.
That's a really good point, Cass, you touched on, and let's just go back to rubbish removal as one that seems quite minor in the scheme of what you're looking for in a policy, but it's pretty significant in terms of if you've got a bad tenant and what has to happen in terms of the cleanup. How often do we come across landlords who have a policy that's through their traditional insurer that those sort of things aren't covered, and how much easier would it be for them if they did have the right policy?
Over the 20 years, I've seen it a lot where they're not with an industry-specific policy. The excess is huge and there's a lot of loopholes in the policy, and that's where they come undone. And they're not covered for the basics that the industry-specific do, and it can cost them thousands. And by the time they lodge a claim, it's not worth it. They're out of pocket. So I think as people are becoming more aware of what policies are available and that, the ones that are designed for landlords, at the moment, those that are with industry specific, I haven't seen one rejected. So, there's lots of claims and there's lots of ones getting paid out, which is great.
Don't raise your hand, mate. It's just ripping up.
That's okay.
It's in grade 3.
Don't want to talk over people. Look, I rent vested for quite a while before I bought my own property to live in, and I know a lot of other investors do. So when I ask questions about tenants, it's not because I want to pay out on tenants, because we've all been tenants at some point in time. But what are some of the, I guess, craziest things or claims you've ever had to put through for landlords because of things tenants have done? Like what's some of the things that have just really shocked you?
That's a ripper challenge, Cass, and obviously we haven't had any major dramas with the client OpenCorp portfolio. But tell us your worst tenant story, and I'll see if I can beat it.
Oh, look, I guess my worst scenario was that probably about 7 years ago. It was a Bayswater property. Tenant was evicted. Tenants broke back in through the property. We put boards and everything up to secure the property. Tenants then took tiles off the roof of the property to get back into the property. They took golf clubs to every single wall in the house. Took their knife set to the lino in the kitchen, and took all the doors off every cupboard, every appliance, everything in the property. And then finally lit fire to the property, and burnt it to the ground. The property was full of asbestos. So the property was worth more as a commercial car park in the end for the underground railway that went through the train station in Bayswater. So now it actually houses just all the commercial vehicles and stuff while that was under construction. But that is my worst case tenant story. It is pretty bad.
That's pretty spiteful.
Yeah, that's horrendous. And and that's a very rare case. I'm sure in 20 years, that's not a normal thing to see.
What have you got, Cam?
Probably got two. Once again, one is actually one of our investment consultants' properties, Costa. You know about that one, Cass, Dan, when it's an apartment he bought before he started working for us in Paran, something like that. The tenants went away. When they came home, apparently the sewage had pushed up through every toilet, and there was like, probably 6 inches thick. Every room in the house was basically a swimming pool of sewage. That was not a good one, but obviously there's an insurance claim on that. My one was actually, and I don't want people to hold this against me because this is probably didn't take the right approach. It's in my early 20s. It's actually a property that Al and I had together that we were down in Liverpool,
Colchester Road.
Yeah, it was a single house, and we're building 6 units or 6 or 8 units on it. And then there was an old house there, which there was the guy we bought it off had a cousin or a tenant he had in there, and he said, "Look, can you stay in there?" While we were getting the permits for the development, we left him in there. Came time to do the demolition. We had gravity demolitions going down there the next day, and we've been asking this guy to get out. I was in my mid-20s at the time, so I thought I'd take it upon myself, and no one should go and do this. This is not the right approach, but obviously he was squatting in there, and I just rolled down there, threw the bluey on and took my ute down so I looked like some sort of random tradie, and got the Jimmy bar and just took all the doors off the place and popped a few windows out. So it was middle of winter, so what I did find in there was an old bong and some needles, so I was quite happy to get him out of there with any means possible. Not telling people to go and do that. I was young and stupid, but there you go.
One of Cassie's current team, I think it's Tori, she's on random routine inspections over her real estate career, PM career, has walked in on dead bodies. One of them had a dead body on a coffee table, had been dead for weeks, and just maintained the body. She went to do a routine.
Is that a cultural thing rather than really strange, or is that like, don't get me wrong, it's pretty strange, but
yeah, she's pretty freaked out. I think.
Never heard of that.
You have to double check with her, Cass, but she didn't say religion. I think it was just some weirdo. But I didn't think religion. Not of it.
This one might be for you, Louis, as well. I've got a good one from Troy. Maybe an odd question. No question's odd, mate. He or she who asks all this weird and strange questions soon becomes a person with all the answers, is my theory.
That's why Cam's good at accounting now.
What's that?
That's why you're good at accounting.
That's why I'm good at accounting, because I ask the accountants lots of questions to their own people.
Cowering in the corners. They just give it away.
The lawyers and accountants desperate to get out of the room. No, let me ask it another way. I was paying by the hour. Yeah. All right. Now the question is, explain rent vesting, basically, Louis. So the question is, how would you explain purchasing a property for investment first and rent vesting rather than buying a dream home to a generation that was brought up that buy their own home, work 30 years to pay it off, and they just shrug when mentioning investing? So how can Troy explain to these folks, I'm assuming, that they're going to go and rent vest, and how that will put them years ahead?
All right. I'll probably just tell a little bit quick on my background. So I bought my first property with Al when I was 18 and Al was 20. I was still living at home. I think, Al, you were renting at the time. But obviously, for me, being able to concentrate on servicing the mortgage without having to pay rent was very helpful. I then went to uni. By the time I finished uni, we had bought a couple more properties together, and I was then renting and continuing to invest in property. Then I moved to Queensland and continued the same. It was a lot better for me, and I guess I wanted to live where I was going to have the most fun, and that wasn't necessarily where it was going to be the best place to invest. So I was sharing accommodation when I was living in Brisbane. I was sharing with 3 guys I was playing footy with, so paying $150 a week rent, paying a little bit more to service the loans on my investment properties, but I was buying out where I was getting in under the median house price, where there were single family home markets, and I was able to get the most capital growth. And as a result, I grew a bigger portfolio than I would have if I was focused on buying my own property and servicing my own mortgage. And I guess from a risk perspective, I didn't really want to have the risk of, if I lost my job and I was in my early 20s, if I lost my job and I had this big mortgage on my own house, then I'd be in a bit of spot of bother. If I lost my job when I had 6 investment properties that other people were paying rent for, well, no stress.
Hey, I'm going to see if I can do something very technically advanced here, Rob. I'm going to try and dump a YouTube link onto the Facebook page. There you go. There you go. It worked. That's rent vesting. It'll come up in a second. You guys will be delayed. But rent vesting for growth. It's a video that Michael Beresford did, which is a side-by-side financial comparison. So
I don't remember the end. I know that rent vesting absolutely knocked it out of the park, but it's incredible the difference it makes by doing those 2 different strategies, which seemingly aren't that big a decision up front, but when you put the numbers side by side, it's incredible.
Yeah, correct. A quick one here. Robbie, good to see you, mate. We'll have a client night on soon. So Robbie bought the property through OpenCorp. I'm struggling here to see all of the questions, but Robbie did ask, will prices go up or down, Louis? It's really straightforward in the near future. What's going to happen? Get your crystal ball.
Well, we don't put numbers around things, but certainly having just watched the budget presentation for Josh Frydenberg, largely kind of in line with what our expectation was, which was there's going to be a big bang of stimulus, and there's hundreds of billions going into the Australian economy from the federal government. Interest rates are at all-time low, potentially going low and going to stay low for the next 3 to 4 years. And then state governments about to spend money. I mean, the West Australian government, Premier Mark McGowan just announced today $27 billion of stimulus to come in over the next couple of years. Other states are going to have the same thing. Just think about Dan Andrews, how popular he's been with these lockdowns. His way out of that is to spend big and win friends again. So all the states will be doing the same thing. So on top of all the federal government stimulus, there's going to be a lot coming through. That's absolutely going to pump up house prices. And you've seen the bank's economists talking up house prices. I think Westpac's chief economist forecasting 20% growth in Brisbane, 15% in Melbourne over the next 2 years. And the reason for that, they know the impacts that low interest rates are going to have, and probably also to a degree, the banks want prices to go up because that gives them more safety and it helps them to recover, I guess, any losses that they've incurred in the last 12 months.
The economists have changed their tune quite a bit over the last 6 weeks, and I, like you, tuned into Bill Evans after the budget the other night. And if you're playing in the tail on the donkey, based on what he said around the country, you can't go too wrong over the next 2 years, coupled with, I guess, where that infrastructure spending goes and all the stimulus. But what's happened in the last 6 weeks, Matt, you think that's made that turnaround happen for the economists, who are all now singing from the same hymn book?
Yeah, I think unemployment rate's not as high as they thought it was going to get. So obviously most of the states, and you take Melbourne out of the equation, Australia's come through relatively unscathed. Like got friends in Brisbane and people that I deal with in Perth on a daily basis, and just life and business as usual. Most of them still going to the office. They're going to bars on the weekend.
So unfair.
Yeah. So they were pretty much back from June. We were on the way out, and now we've obviously ended up coming back into lockdown. But that gave them a much bigger sense of confidence. Then you've got the home builder grant that came in, which has really kicked up construction activity. We know how impactful home building is for the economy because of all the jobs it creates and filters right through so many industries. I guess that's probably helped to some degree, and just seeing the government's willingness to make tough decisions and put money into it, where it's going to go into small to medium businesses and into consumer pockets where it can be spent.
And we talk about, we talk about a bottom-up approach and the first home buyers, I guess, getting the market moving. I know in the last 2 days, with lots of conversations with real estate agents, they're really excited by that 10,000 new places for the deposit guarantee. And they've also increased it by 100,000 in terms of property value. So I guess all those things that you've talked about in the past, is that what they're trying to drive, the bottom of the economy, pushing the whole system up?
Yeah, I mean, the biggest risk for the economy is when there's a top-down market, when affluent suburbs are dragging up the prices everywhere else, because it just creates a bubble and it becomes overinflated. When it's a bottom-up market, which for anybody who hasn't heard us talk about this before, is where the entry-level price, there's such scarcity of product that, and obviously a huge volume of people who can afford that product, they're competing for the properties at the bottom end, and it pushes the prices up from the bottom, which then pushes the next layer up and the next layer up. And it has that spillover effect, as opposed to a Toorak or a Mossman, where prices go from 2 million to 4 million and it drags up other suburbs, which can just as quickly fall back to $2 million.
Right.
When it's a bottom-up market, there's such demand at that level that it doesn't drop back down. That's the floor of the market. It just keeps lifting. And that's obviously where first home buyers come in. That's where we like to come in as investors as well, being in that, not necessarily at the bottom end of the market, but being in that tier below the median house price where we know there's huge demand, and making sure we're in the suburbs that are going to benefit from that in the future. And absolutely, that's what the government wants to see, because that means more homes are getting built, more jobs get created, and it's the engine room of the economy.
One of the things I hadn't heard before that came up after the budget in what I was watching with Westpac was, I think he called it creep forward. So he said, well, we're predicting there'll be growth of 20% in 2 years' time. He said, once people get wind of that and see it happening, they jump in quicker, and that drags it all forward, because they think, well, I need to buy. If I wait 6 months, I'll miss out. So all of a sudden that momentum starts to really snowball itself along, and you get there quicker than I expected to. So I guess we can start to hope for that sort of thing happening as well.
Yeah, it was interesting that he said, if even in his forecast, I think he said, if anything, if I'm wrong, I'll be wrong, because the growth is greater than what I'm predicting.
Yeah. All good. I'm just juggling these questions on this screen. It's sort of limiting how many questions it allow on there. So I'm taking photographs of them and I'll come back to them, guys. So if they're a little bit jumbled, Bernie's asked a good question, which I think is really about, if you've got a certain amount of borrowing capacity, should you buy a specific property in these suburbs or the other suburbs? What I might get you to do, Bernie, on that one, it's fairly specific. It sounds like you've got a specific requirement for what you're doing, and a general answer on where you should buy with a certain amount of money is very different depending on what your situation is. Shoot us an email if you like at cam@opencorp.com.au, and we can have a chat offline and steer you in the right direction. So shoot us that one through. Traversa, I'm thinking of rent vesting, but my current mortgage is actually cheaper than areas where I'd like to rent. From my calculations, if I rent my place out, it would be cash flow positive if I were to change to interest only. What should I budget? What should my budget be for the rent if it's higher than my current mortgage? Is that?
I think it's a really good question to probably talk to a lender, a mortgage broker, somebody who can say to you, what are you trying to do? Here's what you'd free up cash-wise. Here's what you need for a deposit. Is there equity there? And can you get the other property? And then probably make some decisions around it.
Yeah, with that one, I think, once again, the link I've put in there that Michael shows, that side-by-side comparison, is a really good one. And it shows you the benefit of each scenario. It's about a 10-minute explanation, but if it's not crystal clear, once again, shoot us an email, cam@opencorp, and go through a specific situation for you. Simon, thanks for your question. The arrears, there appears to be a lot of new standalone property management companies starting these days. Do you see property management changing in the future compared to traditional property management done at the real estate office? Cass, talk us through old real estate that people are used to going down to their local office in their local area versus the structure that you've got with your team.
Yeah, look, I do think the structure that we have now, working remotely and having pods and specific people doing specific tasks in certain areas, I do think that's the way of the future. I think the sales team will always have that real estate office shop front with the window displays, but even agents who are selling are also more mobile now. They do a lot of their interactions in a cafe over the laptop and speaking to their clients. I think today everything is more face-to-face. Zoom, getting in touch with your clients, you know, face to face, whether it be over video or in person. I do think the future, which we've already proven now that we've been forced into lockdown, the team at OpenCorp property management team have worked tirelessly to get our systems up to date and show that we can do what we can do without having to be in the office. There'll always be a need for the property management office, but you know, when we look back 20 years ago, when we used to have to go and get a key and a deposit, or we'd give out a key for an inspection, those days obviously have changed to what we're doing now. And you know, to lease properties now virtually, with so many people signing leases and they haven't even viewed a property, just shows that the age and the technology that we're in.
I think to illustrate everyone the difference between modern day property management and yesteryear property management, the issue with a single property agency and a single property manager managing your portfolio is that, and this is what we've found in the past, if you get a really good property manager, it's fantastic. But the reality is property managers, sadly, historically are about as transient as personal trainers. There's a limited lifespan before they move on. And that's I know it sounds funny. It's not much difference when I looked at the stats. I think a personal trainer's got a lifespan of about 14 months, and property managers in one role, and property managers weren't much greater than that. And we identified that. So what Cass has done, and there's been a huge amount of work in the last 12 months, is basically to break up the tasks within property management. Because if you're a crap property manager and you want a cruisy job, you do your inspections correctly, you don't really follow up or pressure your maintenance, you don't squeeze the tenant to do that little bit extra. It's easier to go to the landlord to, you know, so you're just trying to put out fires and just make the cruisiest job going around. That's sadly the reality of the industry. The way Cass has structured it is the client liaison managers only deal with the landlords and the tenants. There's a maintenance team over here that handle that. There's an inspections team. So we've got inspections team and maintenance teams throughout each of the capital city states. And then basically coordinated under your control is that relationship management. So each of the teams you're holding accountable, so nothing can get lost amongst it. Mm-hmm. So I think that's a big difference with modern day property management, and a number of businesses are moving to that type of model. It's been proven overseas for quite a long time. But we saw the improvement, you know, nearly overnight. We moved to that model, and I think the yesteryear of a local agent is definitely dying out for sure.
And I think just to add to what Cam said there, and even good property managers who are trying to do everything, it's very hard for them to be able to be good at every part of the job as much as they might want to. Some people are really good at dealing with people, and some people are really good at administration and numbers. Being able to do all of those things and stay on top of every client, you know, portfolio of hundreds of properties is challenging.
Yeah, I think I'll jump once again between. Leonie's asked, should the property manager be in the state of your investment property or portfolio? It's not required whatsoever. So,
no.
I mean, and if they've got the right ground support, you have to have a ground support there. So OpenCorp have got our client liaison team in Melbourne, but they've got, you know, a team of about 8 people in Brisbane, for example. So if I use that as the example, that team in Brisbane they have to bring back inspection reports, they have to get the maintenance, but it's controlled here. That's much more important than having someone running around the local area, because you fall into the same old traps. You don't have to be in the local area. You've proven in August, your team leased 52 properties in full lockdown in the middle of COVID. You know what I mean? So your rental arrears is lower than they've ever been in the middle of COVID. You go, the proof's in the pudding. So definitely don't, as long as the support staff are within that capital city. If you've got a company that's farming those tasks out to other small real estate agents in different areas, I think that's a concern, because you're going to get inconsistency. But if you've got the main relationship manager in one state, but different team members from the same company in other states, then that works fine.
Absolutely, and they're strategically placed to ensure that we get our maximum efficiency and productivity with the inspections and everything there. But I just want to add, in property managers' defence, for every bad property manager, there's 20 awesome property managers.
I was thinking the boots in, Cass, and I always take things to the extreme example. So no disrespect to property managers, and I work with a team of property managers, you know, when we're back in the office every day. So they're going to belt me around the head. I know that. I know that's coming for me. But
and it is more sort of what Matt sort of said. They've got so many things to juggle, and I think that's what we identified, that you can't be in 3 places at once. And if you're out on the road traveling and commuting and doing inspections, you're falling behind on your email communication. So it was really important for us to look at the strengths of each area and focus on the qualities that you know, people could bring to the team, to those that are really good with client communication and follow up and being organised. They're the client liaison managers. And then we've got some amazing inspection people who are so detailed and thorough in their reports. They are incentivised to pick up any faults, any issues, report the maintenance. I can't tell you how many times over the years there's portfolios where it's very easy to be creative and take an angled photo of a room because you don't want to show the dent on the wall, because you don't want to come back to the office and have to write up the report and do the notice for the breach and then follow up and re-inspect it in 2 weeks. The agents that we have doing that now, it is their role. They get paid to go back in and re-inspect. So it's important for them to follow everything up. And we've just found that it's working really, really well. We're having less claims at the end of tenancies, less VCAT, QCAT hearings. As I said, it is working very well, and they're strategically placed so that at a minute's notice, we can call them and say, we need a private inspection at this property. We've got a suitable tenant, and they can do it, rather than relying on the old way where a property manager is just inundated with so many tasks, they just can't get to the property for 2 or 3 days.
Yeah,
I think it's important.
Yeah, that if to answer Leonie's question when she's saying, does a property manager need to be interstate? Really, you need to look at your property manager under that structure, that your property manager is 3 different people. So in the case of our clients, for example, who may be in Melbourne, have properties in Brisbane, you've got your relationship manager in Melbourne, but you've got 2 property managers who look after your property for maintenance, one for maintenance and one for inspections in Brisbane, right in the local area. So
yeah, I've got to say, absolutely need a presence in the state and the suburb where your property is, because they need to inspect it. They need routines, entries, exits, be called upon to check things. If they can't do it, they can't do their job. So absolutely, that's unequivocal. You need to have that.
Nate asked a question. Nate asked, when should a landlord push back on a property manager's request? So if a property manager, how should a landlord quiz a property manager on a request for random maintenance items, those sort of things? What sort of questions should they? I mean, you reasonably need to consider everything, but there's some points that you go, there's some basic questions that a landlord should ask to ensure that you're getting the right quotes or the right information delivered to you, or you're not just getting asked to fix things to keep the tenant happy, because that's the easiest way out.
Maybe Cass can answer as PM, but can I just answer it as a landlord?
Yeah.
I consider all the requests in probably 3 different ways. One is the livability and longevity of the tenant. If I do or don't do it, e.g., I don't know if the door stops missing, can they not live in the house? Will they leave because of it? Probably not. Is it a safety issue? Is the other one. And will it impact the future value of the property? I look at all those 3 things and I decide whether I need to worry about doing the maintenance. That might be different, Cass, how your team look at it, but for me as a landlord, that's my criteria to go, is this something that's really important right now?
Fair call. It's pretty good outlook from the landlord side of things. All right, so Cass, your team's taken hot water service is not working, or what are some of the standard requests you get, and some of the reasonable questioning that a landlord should ask of a property manager to know whether they're doing their job correctly?
Definitely. Like, I think it's important that the property managers ask whether they've troubleshooted to, sometimes it's something as resetting a unit or resetting a safety switch to see whether it's working or not. I think it's very reasonable for a landlord to ask any questions that they can. And it's also the property manager's responsibility to let landlords know if they don't perform certain maintenance or a request, what the consequences might be in relation to legislation. So not all maintenance has to be conducted. So if it affects the livelihood of the tenant and their well-being in a property, then it certainly needs to address. So I think the 3 guides that Alistair talked about as a landlord is definitely what we would need to take into account. There's maintenance and then there's maintenance. If there's something sharp or causes a safety risk or a health risk, certainly needs to be identified. If it's something like a loose hook on the wall, or there might be a blind that is a little bit sticky going up and down, does it affect the tenant's ability to live in the property, then no, then it doesn't have to be done. So, but I think it's important that the property manager is aware of the legislation and the guidelines, and that they can inform their landlords of their obligations under the legislation.
All right, you go. You had your hand up, Al.
Yeah, thanks. So, Cass, and it annoys me no end, but can we just clarify, is a tenant allowed to change a light bulb?
Yes, they are. So
Okay.
a tenant is allowed to replace a light bulb unless it's an LED. With the new LED style, it has to be an electrician. So, but the old-fashioned batten lights, down lights, all that sort of thing, it is the tenant's responsibility. But we can't ask a tenant to get up a ladder because of the litigation if a tenant was to fall. But the new LED lights, which are going into the majority of our properties, if they need to be replaced, an electrician is required, unfortunately.
And they technically shouldn't.
What's
I
that?
was just going to say the LEDs shouldn't
No.
need to be. They've got thousands of hours, so.
Yeah.
Thousands and thousands, yeah.
All right, I've just got a property cast and I've handed it to a property manager to manage my property. They've got a tenant for me, signed up the lease. First month comes in, get a call from the property manager. Tenant wants an air conditioner put in. What should I say?
Oh,
Pretty
look,
big expense. I don't know whether I should put it in. Property managers asked me to put it in.
yep. So look, there's a couple of ways of looking at it. The tenant inspected the property as is. So if they move in and they want an air conditioner, it's not unreasonable as long as both parties agree. I'd speak to the landlord, see if it's something that they do want to do. If they don't want to do it, then let the tenant know. If the tenant wants to pay for the air conditioner to be installed, that's something could be negotiated as well, as long as the registered tradesperson's used and a certificate of compliance.
Yep.
Otherwise, you could renegotiate the lease and say, sure, landlord's happy to put in a air conditioner, but your rent's going to go up $10 a week to be able to offset that and pay for that,
Yep.
and a new agreement made. So a tenant can't demand it, but under the new legislation coming in, air conditioning is a requirement under the minimum standards coming in, but all our properties obviously have air conditioning. Yes, that.
And if you work on and just in terms of investing or capital investments, if you work on a 5% yield, if you spend $10,000 on a property, you want an extra $10 a week. So if your air conditioner is $2,000 extra and you get $2 a week extra, or better than $2 a week extra, you're actually getting better than a 5% return on that investment. So that's kind of the way I always look at those sorts of things. Going, well, spending $1,000, will I get an extra $1 a week rent?
I know the theory, but it'll take a long time at that amount to pay a $1,500 air conditioner off. That was so I usually, in those instances in the past, I've had that happen when a month later they've requested it and I've just said, no, you rented the property without it. Obviously now the legislation's changed, but other tenants I've had for 2 or 3 years, one lady requested it. She'd been there 2 or 3 years. She was a really good tenant. So I said, oh, do you want to go halves in it? But it stays there if you leave. So I paid for it under those circumstances. So I think, and not telling people what to do, that was just the way I looked at it. Troy's
just to be so careful, just on that, Cam, sorry, just be so careful. I will always say, regardless of who's paying for it, that I have to approve the installer.
Yeah.
You don't want their backyard brother
Be a certified
with holes in the walls and hanging out the windows.
Certificate of compliance. Yeah.
Looks like an episode of Seinfeld with the air conditioner jammed out a window.
Exactly what I'm picturing. Yep.
Hey, Troy's got a question. I'll spike it up. Anyone can knock it down. One more question, sorry. Troy, stop apologising, mate. With purchasing your first investment property, would you save up 10% for deposit plus fees rather than saving 20% deposit? Would you suggest using 20% deposit for 2 times 10% each home investment properties rather than 1 to save LMI?
Cam, I don't know if you're quick enough to find a video, but there's also a video on that. Absolutely LMI. The most property you get your hands on for the least amount of money out of your own pocket is what you'd go for. It's a personal one. You want to check your own circumstances, but I dare say if you could buy 2 properties instead of 1 by getting mortgage insurance, absolutely, because the growth in those properties over 10 years doubles. You make $1 million, for example, on $1 million purchases. Versus 500 and 500 worth of purchases.
Hey, Troy, shoot us an email. I can't find the video right now, cam@opencorp.com.au, and I'll shoot you a specific video on that one, mate, just so that that answers that question. It's a really good one, but Michael does once again a flush out of buying one property and running it on that side, or buying two, and then obviously the mega difference.
Because what's the cost of the LMI? What are we talking? Probably 20 grand.
Yeah, Louis, the calculation stuff he said. I don't know.
Yeah, like 10 to 15 grand per property.
Yeah. So so the way Boz puts it in the video, would you invest 15,000 to make 500 in 10 years?
Yeah.
Yes, you would.
It's a reasonable rounded assumption. So
Yeah.
Yeah, exactly right. I mean, if you can hold, it's a very cheap way to hold more asset out of your back pocket. You know, so LMI is some of the best money that I've ever spent back in the day, for sure. For sure. All right. So what's happening with vacancy rates around the country? I know you're killing it, Cass, with your team, but your client's portfolio is not the average portfolio.
What are your vacancy rates, Cass? Just give it a bit of a trumpet blow.
So as of last month, we were 0.48% for Victoria and 0.47% for Queensland. So
under 1.5%, like not even 0.4.
Under half.
Wow.
Yep.
Amazing.
Very impressive.
If I talk prices and just go up a few of the figures, obviously the CoreLogic data came out about 8 days ago. So it's old data now in property world, but have we reached the bottom yet was basically the song we rang. You don't usually ring the bell, you don't hear the bell ring at the bottom, but I think once before, just after the election, we said things are going to start to crank up again now. I think it's too early to call that, to be 100% certain of it, but the second this vaccine's released, it's game on again. But the question can be asked, like, have we reached the bottom? Nationwide, all dwellings fell 0.01% or 0.1%, sorry, in September, indicating the rate of decline is easing. 6 out of 8 capital cities actually increased in dwelling values. Melbourne, most affected, obviously fell just under 1%. What else have we got? Since peaking in March 2020, Melbourne values have fallen 5.5% in total. So the declines is a big hit out of that from Melbourne, but the majority of that decline has happened in the affluent suburbs. So the affordable suburbs actually increased in some areas where Matt and the team are investing. What do we got? Soundbite from Tim Lawless, who's the head of research for Australasia. The aggregated effect of low mortgage rates, the prospect that rates could fall further, low inventory levels, so low supply, government incentives, improved consumer sentiment seems to be outweighing the negative economic shock brought on by the pandemic. We aren't seeing any signs of a rise in distressed listings or stock starting to pile up in the market. In fact, the opposite seems to be true, where new listings are being absorbed by the market faster than the rate they can be added. So Tim's not usually an optimist. He's pretty factual, but it's about as optimistic as I've seen him for quite a while. Go, Louis.
Yeah, so you asked about vacancy rates as well, and it probably ties into some of what Tim just said in terms of new listings being absorbed in the market fairly quickly. So if you take data out of it and you just think logically, like particularly in Melbourne right now, since March of this year, people who have wanted to buy a house and who I guess are hands-on and wanting to go through a house have had very limited opportunities to. So you got that 7 months of potentially pent-up demand from buyers. Obviously, there's also sellers who haven't put their properties on the market because they don't want to do it until the house is presented well and they can take people through it. So it's probably unlikely there's going to be a lot of properties hit the market in the next 2 months. Early next year, there might be a bit more, but that means 7 to 8 months of demand pent up, competing for a smaller pool of properties over this spring and summer. And if you think about that around the country, while yes, there's more opportunities in different states, what we are seeing is, and it ties back to that precisely, if you look in Brisbane, you look in Perth, you look in Darwin, Hobart, Canberra, Adelaide, every one of those cities right now has lower vacancy rates today than they did a year ago. They're trending down. 4 of the capital cities right now have got 1% or less vacancy rates. And that just talks to the fact that there's more people in that rental pool or stuck in the rental pool for longer that haven't been buying their own houses. So obviously they're absorbing all of that rental stock. That's going to put a lot of upward pressure on rents. Sydney's trending down. So pretty much once they got out of their lockdown, it started to trend back down. And obviously as their economy is opening up, the Airbnbs are going back into the short-term rental pool. So they're coming out of that market, that long-term rental market quickly, which is bringing their vacancy rate down. We'll probably see the same in Melbourne. It's still been creeping up. It's sitting about 3.2% today, which is higher than it was at the start of the year. It was about 2% at the start of the year. But most of that spike up in vacancy rates happened in March and April, when all those Airbnbs and the stays properties, the short-term accommodation, all got dumped into that long-term rental market, and it will come back out once people are able to start moving around and using those, I guess, those holiday properties a bit more. So it just talks to the fact that there's still an undersupply of houses around Australia right now, and that's going to be a big impact on how prices I guess, perform over the next 6 months. And maybe we haven't reached the bottom in Melbourne in terms of statistics, but in terms of sentiment, we've absolutely reached the bottom.
Anthony's got a question, Matt. This is definitely one for you. What do you think of NDIS properties? I know that's a very open NDIS question.
Yeah, no, it's a good question. I spent about 2 years researching NDIS properties. I've looked at a lot of different models. We've engaged with some of the providers, specialists in the space, some of the builders around the country who are working on this. My biggest concern with NDIS properties, and look, I think they're great from a social aspect, from a rental income perspective. It's great. A lot of them are going into the, let's call it the communal living type of property, where it's a house with 3 bedrooms or 4 bedrooms, 1 for on-site overnight assistance, 3 for the occupants. And the amount of money that goes into them you tend to overcapitalise if you're comparing that property to a house. If it wasn't an NDIS property, there's hundreds of thousands of dollars extra being spent on it to make it ready for the occupants and to hit all of the requirements from a design and specification perspective. My biggest concern with that is that there's a lot of new properties going to come into the market over the coming years. And as they come in, the incentive for the government, and I know the funding's locked in aggregate, but the amount that the government pays per occupant will diminish over time. The amount that the families contribute may diminish over time. And I guess from our perspective, we saw that as a bit of a risk, that you could overcapitalise on the house and find in 5 years' time that your rent's actually not much better than you would have been getting for a normal property. And if you were going to sell it, you would have to wipe off hundreds of thousands of dollars of equity. So, yeah, so that's obviously, as I said, I've done a lot of work on this. There are some models that I think I would be more comfortable with, but it's not necessarily for a typical investor. And the model I'm more comfortable with is if you own an entire building and you put 5 units out of 40 for NDIS, and you're going to get extra rent for them, and it didn't cost you any extra to make them fit for purpose while you were building that building, then great, you've just boosted your income across that building. But does a typical investor build 40 units to retain them all? Probably not.
Yeah. So can I just ask a question related to that, Matt? And I guess in light of what's happening with aged care in Victoria specifically, but I guess around the country, will that change the way the NDIS and I guess housing and living changes over the next decade or 2 decades, do you think?
And sorry, I should just get you, Matt, just to give everyone a quick understanding of what NDIS is. I don't think, I think I missed that at the start.
Right, so the NDIS is National Disability Insurance Scheme, and the actual scheme that pays, the type of housing is called Specialist Disability Accommodation. There's funding. In fact, the funding for NDIS is a collective funding, and it's not just for the accommodation, it's for all of the services, and most of the money goes into the services. And the people who are selling NDIS properties generally aren't saying the 700 million a year that's set aside is for mostly services. They're saying, oh, it's 700 million for SDA housing and we've got to get a piece of it. It's not how much money is set aside to pay rent for all of the occupants. So specialist disability accommodation is obviously accommodation specifically designed for disabled persons. It could be people who are on the autism spectrum. It could be people who are severely disabled and need high physical needs. And there's a huge array of people who have need for specialist disability accommodation. Unfortunately, at the moment, or historically in Australia, some young people who have been unable to be cared for by their family have ended up in places like aged care where they can actually get the support, but it's not a great environment for them because they're not surrounded by other people who are, I guess, similar age or who they can interact with. And they might not get the attention that they need as well. So that's, I guess, a bit of a background in terms of SDA and NDIS. Sorry, Al, you asked the question as well.
Yeah, well, I guess, as I said earlier, I'm pretty actively talking to real estate agents almost all day, every day. And a lot recently are saying things like their inquiry profile's changing off the back of what's happening in aged care. Excuse me. They need somebody to go and live. They're frightened of what that might look like, so they're looking for alternate solutions. And I guess I'm saying, my question was, do you think the housing types that we're seeing today will change over the next decade because of what's happening with COVID?
Do you think you specifically to the elderly, you mean?
Yeah, I guess elderly in that case, because aged care, but yes, coughing and losing one.
You got a biscuit or something, mate?
Oh, look, I think it's early to say at the moment. Obviously, there's a Royal Commission into aged care, and I think one of the outcomes of that will probably be a huge improvement in how they're operating. And there's a lot of I guess, scrutiny on it at the moment, and particularly with COVID has really brought it out. And there's some talk of potential consolidation into making larger, more professional organisations that operate to a higher standard across that industry instead of lots of fragmentation. So that might happen in that aged care space. I guess the other things, if we think about the NDIS as well, and even in the mindset of aged care, so myself and our investment committee, when we were talking about NDIS, one of the big things on our discussion was, do we want to take on the issue of caring, as much as we think it's great social, I guess, cause, and if you can generate a higher income from government subsidies while also doing something great for the disabled community, win-win. Except you don't want to necessarily take on the risk of a carer who does the wrong thing by the tenant or an occupant. That's one of the things that's come out of the aged care inquiry as well, is just the mistreatment of people who are vulnerable in society. So one of the things I guess I could see in housing that might change is a generational, I guess, houses built for multiple generations. And you look overseas, and this comes back to, you mentioned about one of our staff who walked in on not while she was working for us, but a property manager walked in on a body for an inspection and found a dead body in the house, who'd been there for days. And I remember talking to somebody when I'd been in Italy a few years ago and came back. I was talking to a guy who has a lot of Italian family, and we were talking about how close together they all live over there and how crowded the city is. And he said, oh, you know what, in Italy, you never hear of people who died in their room and weren't found for days, because they're also interconnected with their community, and they're all having breakfast with their friends down at the coffee shop and then they catch up for lunch and play chess together. And their families are so, I guess, intertwined. So they have, I guess, their social care is their family, whereas in Australia, it's been separated. There's been, I guess, a degree of social care for the aged. It's separated from the family. And that's one thing that might change a bit, perhaps,
so you're saying Felicity might ask my parents to come and live with us?
And hers, all at once.
yeah, that'd be great.
That's a recipe for a sitcom, isn't it?
More than a sitcom, it'll be Fight Club. So I've got a question for Cass, which I think it's a very important question. I think it's a very simple question, but the importance of it is paramount. So Leonie's asked, do you suggest getting everything in writing for changes or any requests that are made when you verbally agree with your property manager? The decisions of your property manager on anything involved. And no dramas whatsoever, Leonie, about asking so many questions. We love it.
Yeah, 100%. My motto is, if it isn't in writing, it doesn't exist. So it never happens. So I think everything needs to be followed up in writing. And that goes for the property manager as well as the landlord. It just covers everybody's bases. So nothing gets done verbal.
So you're saying if Leonie's property manager is not astute enough to put everything in writing at the end of that, then she should be...
Bring it across to us and we'll do it for her.
Yeah. We'll put it in writing.
Yeah, she should be emailing the property manager saying, just confirming our conversation, you agreed to
As
X,
discussed.
as
Yep,
discussed.
absolutely,
Yeah.
100%.
Cover yourself.
But I think a really relevant point to add to it, Cass, and the question earlier about what's changed in property management versus your local office and now companies able to operate nationally. Every single conversation, phone call, email, interaction, SMS is all captured in our system, and our staff are measured on those things so that we know exactly what they're doing. So I think what she's saying there is it should be absolutely mandatory that it's in writing.
Yeah.
You should be expecting nothing less.
Yeah, especially when someone's spending your money or changing your the aspect of the property that you own. Miles has said spot on that. Social construct of the Western world's very different. He prefers the Italian way. Hey Miles, good to thanks for joining us. I think it is something that my kids have enjoyed going overseas, and something I didn't do until I was well and truly in my late 20s going overseas. But it's amazing watching the kids go overseas, and it's like they're watching an alien world when they understand different cultures. So you can really, I think, watching kids absorb the way different cultures work is it's amazing thing to absorb when they're learning the different ways people have dinner and lunches and go to school and those sort of things. So it's one world, but we do things very differently. But I think some cultures do things better than us for sure.
I was in Thailand in January, and the kids are amazed that 6 people fit on a motorbike while some are doing homework. So it's certainly an eye-opener for them.
Yeah, I'll tell you what, they've handled COVID very well in Eastern Asian countries, Thailand, Taiwan. We can learn a lot from that.
Is that because of SARS? They're familiar with how to...
Yeah, and people, just as a late plug, if anyone wants a copy of this new book, which has gone to the printers that Matt and I wrote over the last 3 months, it's a culmination of work we've been piecing together over the last 20 years, and paperwork we've been kicking around between us for a very long time, investing in the new normal. So it basically takes a look at all the past economic events, gives clarity to the economic and property market drivers so people can get clarity in the current event and in the future events. But one thing was amazing, the research we're doing, Matt did a huge amount of deep-ended research, is that when you look at the hospital that was built in Wuhan when there was 100 cases known to China, apparently, they banged that hospital up really quickly, and it wasn't a mystery the way they knocked it up. They knocked it up in a week, 1,000-bed hospital, because they'd had experience. They'd done one similar in Beijing. This is Ruby. Say hi.
Hi.
Hey, Rubes.
So the Asian countries are definitely who'd handled SARS and MERS, those sort of countries are used to that. So my sister-in-law's Australian citizen, Thai born, and talking to her about the way that Thailand handled COVID when they first got on board. They had 1 million health workers spread out to all the cities and villages, robotic dogs that were going through shopping centres carrying hand sanitizer around, heat sensing robots going around, and they had them there ready to go. They just rolled them out. It was immediate. They also have a different customs in the way we shake hands, hug and kiss, which is why some of the European countries have really been hit hard, as opposed to the Asian cultures who bow and keep their distance. So they're already social distancing, and to the point where right in the crux of it, when Australia was taking off in her numbers, and Thailand was doing way more tests than us. They were stopping people in the streets. They were nailing the tests. So this wasn't hidden the figures, but for 40 days, they had no community transmissions in Bangkok or across Thailand. So you think of Bangkok, the type of congestion there, that they knew how to social distance even through those areas. So it's just...
I reckon it's a really good thing as well to kind of draw a connection to that, to property markets. For people who might be nervous about what's going to happen in property markets, sort of beyond this or in the economy. Al and I were talking the other day as well about GFC, and the GFC hit most people not expecting it. And I remember reading an economic book in the years after that, and it said that the biggest risk is the risk that you don't know about. It's the unknown unknowns. But once you know about something and you can think that this might be a situation, you can plan for it. And the Asian countries who have adapted to obviously airborne illnesses like SARS, when COVID hit, they were able to address it really quickly, whereas a lot of the other countries like America and Europe who thought, no, this will be fine, it's not going to happen to us, because they hadn't experienced that in recent memory. They were unprepared and it just knocked them for 6. So Now that we all know what this is, we can plan for it, we can accommodate it, we can live with it if we have to, and just get better and better at adapting to a way of life that I guess avoids us. I guess having mass deaths, I guess, from COVID. So that's one of the things that gives me confidence about, I guess, coming out the other side shortly.
No, I agree. I think we're going to wrap it up. A couple of things. I firstly want to thank Cass for joining us. Cass, I wish we could be back in the office together. It's killing me, this not being able to interact with the team back at work, but hopefully we get a bit of relief from that, being Victorians. The second thing is Leonie's asked, and I appreciate you getting value out of it, Leonie, but how do you get a copy of the book? If anyone wants to get a copy of the book, just email me at cam@opencorp.com.au and I can organise a copy. We've got pre-release going out. I think there's 5,000 nearly going out in about a week and a half. They'll be off the printer and through the distributor. So we've got a huge list of people going out. That'll be the first batch that go out. And then it might be a few weeks after that before the second batch goes out. And then it hits stores and Amazons and Audible and all those things. But while my name's on there as the key author, I do need to point out that Matt did a huge amount of work on this one. So he gutted what I first had and reshaped it and put some stats on it. And then I carved it back into my language. So it was definitely a collaborative effort. So I reckon it's a ripper.
Are you saying Matt did some stats? He actually used stats.
Yeah, so he likes numbers for some reason.
Yeah. He wouldn't do that. He doesn't do that.
Okay.
I think I tripled the word count, and then they had to carve about 50% of that back out again.
Yeah, he said you've edited the hell out of this. Where's all my words you've done? I said, mate, brevity has got to win through sometimes. So, anyway, guys, thanks, Tracy. Glad you enjoyed, and we'll see you all next month.
Thanks, Cass.
Thanks, everyone.
Thank you.
Thanks, Cass.
Bye.